Hello and welcome to another episode of the Aim High podcast. I am your host, Ben Shin, and today's guest is Andrew Sung. Mr. Sung is the principal and head of research at Atlas Credit Partners, a Houston-based special situations credit fund specializing in secured direct lending and secondary credit opportunities. With over 15 years of experience working in complex credit markets, he has held leadership roles across many institutions, including Lehman Brothers, Pine River Capital Management, and Barclays, to name a few. Please welcome Andrew Sung to the podcast. Thank you for being here with us today.
Thank you, Ben, for having me. I appreciate it.
So to start off, we'll first talk about your childhood and upbringing. Because this podcast is centered around being an Asian American leader in business, it is important to first understand each guest's childhood and upbringing as an Asian American, because ideas instilled within you from your parents and environment may have helped you become successful in where you are today. So to start off, could you maybe explain your childhood situation growing up? Where did you live? Did you have any siblings? What were family dynamics like?
Yeah, I grew up in a small town in Western Pennsylvania, the youngest of three, and had a very, very good childhood, very good family, and very lucky for that. My parents immigrated from South Korea before I was born in the mid-'70s when they had my sister. And then, my older brother was born about a year later. So I'm the youngest by 7-8 years. My parents still live in the same house that I grew up in Western Pennsylvania. My sister is a doctor, and my brother is an executive in finance as well. And so, being the youngest was nice for me because I was probably a little more spoiled than my brother and sister. But I think that as far as values and things, I'm very fortunate that I had parents that pushed me in the right direction of, setting very good examples of, really stressing hard work, education, honesty, sincerity, and had really great examples of my sister and my brother also embodying those as well. And so, being sort of the youngest, I, had my parents, but also had brother and sister that sort of acted as surrogate parents for me to some degree as well.
Yeah, and how did your parents' experiences as Korean immigrants to the U.S. influence your perspective on work and success?
Yeah, I mean, I think that I'm not sure that it's that different from just sort of American values of just hard work, responsibility, honesty. I think that the flavor of the Korean element was probably that doing a good job was expected. So there wasn't as much of, hey, you did a great job. It was much more of, I always tell the story with my mother. If I came home with a 99% on a math test, the question, it wasn't, oh, great job. It was, why didn't you get 100? And so, I think that at the time you're sort of a little annoyed by that. But I think that mentality of, sort of wanting to maximize your potential and knowing that you can always do better. It can be frustrating at times, but it's also a good mindset to have. And so, I think that that's sort of, again, not too different from, I think, traditional American values, but probably more in that, you didn't hear that much that, you did a great job, but, I think hopefully deep down they thought that. So.
Yeah, and were there any specific experiences or lessons learned during your childhood that you believe set some kind of foundation for maybe your future success?
Yeah, I think that it was just whatever it was that I did, whether it was sports growing up or school, my parents just always stressed doing the best I could and trying to be the best or be my best, right? And so it's not that necessarily she cared about how good of a Little League baseball player I was, but, I tell the story that if I didn't have a great game, we'd stop at the batting cages after the game and she'd make me hit balls. And so just that mindset as far as taking that and applying it to everything that I do is something. And, I think that growing up playing sports my whole life is something that, is important as education as I think. I've probably learned way more about life and that through playing many sports growing up and through college as well. But, I think that what I learned from my parents was just whatever it is you do, try to be the best and try to be your best. So.
Yeah, definitely. That's definitely a theme among all my guests, is just doing the best in like whatever you do, no matter what it is.
Yeah, no, it's an important lesson. And, if I'm ever fortunate to have a family of my own, it'll be something that I certainly instill too. So.
Yeah. And did you feel any pressure to conform to certain expectations, either from your family or from outside of school or in school?
I was lucky in that there wasn't a ton of pressure to conform. I think that kind of funny enough, growing up, uh, I thought the only things you could do professionally were being a doctor or being a lawyer. And so, would they have liked me to go to medical school and be a doctor? Maybe, right? But I don't think that they're disappointed in, the career path that I chose. They got one doctor in my sister, so I think that probably suffices. But um, no, I mean, I think that, there are certain things that, my parents made me do growing up, like playing the violin, which I didn't really like very much, but I did it anyway. But they were very supportive as far as me pursuing interests. Like, again, they didn't really care that much about sports, but they knew that I loved it. And so if I was going to do it, I was going to do it and do it well. And so I think growing up throughout high school, if I wanted to go to a lacrosse camp or a hockey camp or something like that, they never said no. So I think that they embraced the fact that I liked doing those things and I was pretty good at it. And if I was going to do it, I think they appreciated that I wanted to continue to get better. And so those were all things that they were supportive of. And I'm very fortunate that they didn't sort of try to force me to do something that I didn't want to do. Although I guess playing the violin is something that they forced me to do, but luckily I was able to quit at some point. So.
Yeah. And then did you have like in your childhood, do you have like a feeling of maybe what you wanted to do when you were older? Like, did you maybe want to go into medicine, or did you know you wanted to do something in business when you were younger?
I didn't. And again, growing up, I didn't really know of the world of professions that were out there, right? So growing up in Western Pennsylvania, it's a very blue collar area to where the professionals generally are, either business people or doctors, lawyers. And so, again, my sort of view of that was a little narrow. And, growing up, I didn't know what an investment bank was or what a hedge fund was or private equity, right? And so
Yeah.
even sort of throughout high school and into college, I sort of learned about it much more, obviously, because, you have older friends that go into those professions. But I didn't know really. I think that I didn't. I think I knew early that I didn't want to be a doctor, and part of
Mm.
that was just seeing my dad having to come home or be on call in the middle of the night, and it was sort of a lifestyle that I didn't really want. I think it's not to say that now I don't work hard, but it's sort of rarely would I get called at 2 a.m. or something like that and have to go in. So.
Yeah. And as we move on to the education and early career part of the podcast, can you maybe walk us through your academic journey, maybe starting from high school at Phillips Exeter to college at Princeton?
Yeah, so my sister also went to Exeter. So when I was in maybe second or third grade, I think second grade, she went there. And so I got a very early look as far as what boarding school life was. And, that was kind of the path I think that I knew I was going to be on at a very early age. And it was an amazing experience, high school, because, some of my best friends to this day are still, I keep in touch with them regularly. And I'd say that it was academically probably the most rigorous of my life. And you're probably going through that now at Andover, right?
Yeah, definitely.
Um, where you have no free time, right? You wake up, you go to class, you have practice, and then you have 5 or 6 hours of homework that you're expected to be able to finish in 2 or 3 hours. And so, when I was there, we had class on Saturdays as well. So I don't know if you guys still
Oof.
do that, but
No, we don't have
have to.
class on Saturdays.
Yeah, so half day Wednesday, half day Saturday. So you really only had one day a week to sleep in, and but I'd say that the level of education there was excellent, and I don't have anything to compare it with, but um, its reputation is what it is for a reason, in that whether it be Latin or math, physics, the way they taught is very unique, and in many ways, I've retained and learned a lot more from my high school days than my college days in some ways.
Yeah, and then moving on to like Princeton and college, what was that experience like and that journey of like finding what you maybe wanted to do after college?
Yeah, that was a wonderful experience as well. Again, some of my best friends also are from my college experience, and I think I was lucky in that I played a sport. I played lacrosse in college to where you're able to establish relationships with upperclassmen, where maybe in other areas it might be a little harder to do so. So,
Mm-hmm.
again, coming onto campus as a freshman, I didn't really know exactly what I wanted to do, but you see the example of some upperclassmen going to work for certain firms, and when they come back to campus, you're able to ask them what that's like, and the more and more people that went into finance roles, it seemed more and more interesting to me, and so that was very helpful to me because I was able to sort of try to focus my career efforts there earlier on. Get fortunate enough to get a couple internships to where that set me up to where, upon graduation, I was able to go right into finance.
Mm-hmm. And can you tell us about those maybe first couple internships in the journey of getting that first job after Princeton?
Yeah, my first internship was unpaid after my sophomore year at the NASDAQ stock market. So it has nothing to do with what I do right now, but it at least exposed me to how markets operate. But again, it had nothing to do with what I do now, but very grateful for that opportunity, even though it was unpaid. So I mean, I think that a lot of earlier internships, the value is much more in the experience and learning than sort of whatever nominal sum you might make over the summertime.
Mm-hmm. Yeah, and then what was that first job you got after college?
Sure. So right out of college, I worked at Lehman Brothers, which is no longer, but at the time was, considered one of the top investment banks on Wall Street. I worked in, credit sales and trading on the sales side to start, and then eventually moved over to the trading side. We specialized in servicing institutional type clients like hedge funds, pension funds, mutual funds, and our specific product area was credit derivatives, which at the time was a very was a very high growth market at that point. So the experience for me was I got to work for excellent people that continue to be mentors of mine to this day, and I think even though what I do now is not directly related to that, it did give me sort of the ability to learn how credit markets work. It also, introduced me to a lot of people throughout. Much of my network today it has been established from a lot of those earlier contacts, and
Mm-hmm.
also I think that it's important to uh, have an ability to think almost like a trader to some degree, right? Where you have to be able to make quick decisions. You have to be able to understand when there are opportunities that may be asymmetric in your favor or asymmetric against you, and understand accordingly when to act. And so I think that again, while directly I don't really use a ton of what I did initially to start, I think it did certainly help me develop the proper psychology of how to think like an investor and really think about being comfortable with taking risk.
Yeah, and what were some of the greatest difficulties or challenges with that first job, and how did you learn from those to then apply it to your jobs moving forward?
Is more that I didn't know what I was doing, right? Because they don't teach classes in college about credit derivatives or credit default swaps or what have you, right? So I showed up on day one, maybe 5 days after graduation, and your primary job then is to answer the phones for which on a trading desk it rings nonstop, and so you learn pretty quickly to multitask and to um, understand who the clients are and to respond very very quickly to them, and then as you sort of get better at some of the earlier administrative tasks. You actually have to learn, how these markets operate, how the product operates, and that was probably the hardest part. But the good thing is it's not rocket science, but it's definitely not something that they really teach in school. There aren't many textbooks on it. It's all sort of on the job training. So, but I think that again, it was a great learning environment for me. And, I'm very, very fortunate that that was my first job out of college. And those were the first people that I worked for.
Yeah, and like what inspired you then to go into like opportunistic credit investing, and was there like a specific experience or a turning point that led you to this field?
Yeah, it was really, maybe, you know, 8, 10 years into my career, I forget when, but uh, the credit derivatives market had become more and more commoditized, automated. And, the way I viewed it was, I definitely wanted to move more toward the investing side. So, buy
Mm-hmm.
side, hedge fund, private equity, private credit, whatever you want to call it, um, rather than sort of the sell side, which is considered on the investment banking side of the business. And, I learned that much of the investment process is driven by research analysts and through a fundamental bottom up research process, less so by the traders, especially on that side of the fence. And so, from my standpoint, I wanted to be able to look at a company and rip it apart from the bottom up and understand everything about it. And candidly, as a trader, you're not really taught that as much. And so
Mm-hmm.
that's really where the impetus to begin that pivot in my career happened. I was fortunate that at Pine River, the management team was supportive of me making that move gradually, and had some great people that I was working with that helped me sort of make that transition. But it was a lot of just sort of in my free time, nights and weekends of, dusting off the old accounting books, learning how to build Excel models, and then just sort of doing it, reading as many value investing books as I could get my hands on, and, sort of reading as many public company annual reports, learning how to read credit agreements, things of that nature. So it was all stuff that now has become very second nature to me. But at the time, I had no idea what I was doing. So
Yeah, and then can you maybe explain like your career journey from then to maybe like where you are now, or how that opportunity to join Atlas Credit Partners came about?
yeah, so Atlas was founded in late 2019. The head of the firm, we went to college together. He was a senior on the lacrosse team when I was a freshman. So
Mm-hmm.
we've known each other for over almost 25 years now.
Wow.
And throughout my career, he's just been a really positive resource for me, positive sounding board. And so at the time, I was working at a firm called Reorg Research that specializes in publishing deep dive analysis on distressed opportunities. And so, I was looking to make a move back to the investment side. And so when the opportunity came, to me, it was a no-brainer because, I believed in the platform that he envisioned, and he gave me an opportunity to have a very senior role to head the research team, which hopefully I've continued to earn. But I think that he started it in late 2019. I joined in call it mid to late 2020, and
Mm-hmm.
have been going ever since. So I think that we're I moved here to Houston not knowing how long I'd be here, but it's been over 4 years now, and it's been going pretty well so far.
Yeah, and now we will move on to the part of the podcast where we talk about your current career. So now can you briefly tell us what your role at Atlas Credit Partners is, and like what you do, and like what your responsibilities are?
Yeah, so my title is I'm the head of research, but because we're a smaller company, you oftentimes do many things other than just your role. So, just a little bit about Atlas. So, we specialize in private credit. So effectively what that is we provide debt solutions to companies that cannot otherwise go to a bank within the middle markets. And so to date, we've invested right around $1 billion of capital.
Wow.
And, investment sizes have ranged anywhere from 25 million to on the larger end, over 150 million. And, we'll look at companies across many different industries, whether it be a consumer products company, a telecom company, business services, industrials, you name it. And so the reason why, a lot of these companies cannot otherwise go to a bank is that it may be, you know, think about some of the high growth companies that might not yet be profitable or, might have lighter asset bases. When you think about bank underwriting standards, generally speaking, they want to look for either a hard asset, real estate, something of that nature, or a business that has very predictable cash flows over a 5, 10 year period. And for one reason or another, some of these businesses, either they're growing so much that they're reinvesting everything back into the business to where they're not yet profitable. Or on the other end of the spectrum, it may be more of a turnaround, distress, restructuring type opportunity where the business has hit a tough patch to where it's considered to be distressed, and a lot of banks don't want to lend to those types of companies. So we kind of see both ends of that spectrum. But to answer your question, as far as what my role is, we have a great team of investment analysts that do a lot of the heavy lifting as far as investment analysis. But I oversee that process. Sort of responsible for finding new investment opportunities, and that each year we'll probably see 250 to 400 opportunities come across our desk
Wow.
in a given year. So one per day, more than one per day. Most of them we throw out right away. But, I think that, you know, we're very, very selective, and that of those we'll maybe end up doing, a few, maybe 5 or 6 per year at the higher end. But so, a lot of my job is, cultivating relationships with management teams who help us find these opportunities, or bankers, advisors who also help us find these opportunities. But ultimately, when sort of an opportunity comes toward the bottom of the funnel, so to speak, and it's something that we want to actually seek to invest in, that's when, I'll certainly take a lot of time to make sure that I understand it and am researching it and checking the work of all the analysts. And then I do quite a bit as far as sort of the legal and structuring of these deals, because anytime you're looking at a debt investment, it's a very heavy legal process that has quite a bit of nuance in it. And so, but I think we're a firm that everyone does a little bit of everything. But that's sort of what I do on a day-to-day basis in a nutshell.
Yeah, and what is like your favorite part of your job? And like what aspect either like excites you or motivates you like the most?
Yeah, I like the actual research process when, my favorite days are when I don't have any calls that day and I can simply read all day or something, research a company in depth. So I don't have many of those days, but, I do try to at least every day for a few hours, whether it be at the office or when I get home in the evening, just make sure that I'm doing quite a bit of reading to make sure that we're either finding new opportunities or understanding the ones that we're evaluating. So that's my favorite job and part of the job. And, I love sort of uncovering something that that we think is an exciting opportunity, because that's sort of how we hopefully differentiate. But that's sort of where, when you find an investment opportunity that you think is unique, that not many other people are finding, and you can actually execute on that, that's the best part of the job.
Yeah, and then on the flip side, what are some of like the most challenging or least enjoyable parts of the job?
Yeah, I mean, I think it's just sort of some of the puts and takes of being at a smaller firm where, I've worked at larger places in the past where if something comes across your desk and you don't know the answer right then and there, you can just forward it to someone and it gets done. So that part is nice. There's less of that, where we are. And so that's probably it. But, I think as we hopefully grow to where we want to get to, more problems will come up that it'll just be of a different nature. So I think in whatever profession you pick, whether it's finance or anything else, most of your day is trying to solve problems, and you have to embrace that, and hopefully sort of the good things will outweigh sort of the problem solving. So.
Yeah, and when researching a company to invest in, how do you like identify which ones might be a good opportunity for Atlas Credit?
Yeah, because we're doing everything for the most part in private markets. There are we'll look at public companies as well to where you can just pull their annual reports. But first and foremost, you're looking for a good business or a good asset. And how do you define a good business or a good asset? It's something that in a normal year can generate a pretty consistent stream of cash flows, right? So a lot of that comes from just experience of having researched many, many, many companies in many, many different industries to where the pattern recognition of being able to just, understand what the business does, who their competitors are, and then, high level view of the financials. When I said that most of the things we should throw out right away, with that experience, you can pretty much dismiss a lot of these opportunities pretty quickly. But when you see a business that has a pretty established customer base with a healthy revenue stream, and they're generating very, very consistent cash flows and high returns on invested capital. That's usually you found a good business.
Mm. And when you are like meeting with a company, what does that process like actually look like when you want to invest?
Yeah, because a lot of the deals that we're doing are privately negotiated. The relationship with management teams is actually very important, and it's an important part of the underwrite too that doesn't show up in an Excel spreadsheet or in any sort of database. It is very qualitative in nature, but you sort of first and foremost you have to gain comfort that you can trust the management team, that they're good stewards of capital, that they know how to allocate capital, and that they know how to operate, and that they're honest people, right? Because you're providing them with a loan of millions and millions of dollars to where you need a return and you need that back on behalf of your investors. And so that is oftentimes a pretty qualitative exercise, but it can be something that's established over many, many months, or in some cases many, many years as well. There's some investments where will have been introduced to the management team like 2 years ago, and we just sort of continue that relationship. And then at some point 2 years down the line, they call and say, we're looking to, we need money for XYZ. Can you help? And so those are some of our better types of opportunities when we know the management teams very, very well. So that's sort of it's a good question.
Hmm. And how do you evaluate and handle, especially the risks that come with investing in these distressed companies?
There are risks to any investment, and the types of businesses that we'll evaluate. I'd say the biggest risk is that, as I mentioned earlier, they can't get your traditional bank financing. And so, how do we manage the risk? You're conservative in every part of the process, and
Mm.
that's sort of where I think I mentioned earlier, reading as many value investing books as I could. The sort of number one rule of value investing is don't lose money, and the second rule is don't forget rule number one. And so how do you do that through the lens of private credit special situations? First and foremost, you have to understand the business. You have to have a sense for what the asset and what the business is worth, and that's through all of your understanding how the cash flows of the business work, competitive advantage, who their customers are, and so forth. But there are countless ways to value a business or an asset. And if you ask 10 different people to value it, you'll probably get 10 different answers. And so you want to understand where your assumptions may be overly aggressive or overly conservative. And, I think that balance of being very conservative in how you're valuing these businesses, you'll make far fewer mistakes if,
Mm.
you're buying things cheaply, effectively. And then on sort of the legal structuring point, it's making sure that, your rights as a lender, as a potential creditor, cannot be impaired. And so that comes just through understanding a lot of these nuances in credit agreements and things of that nature. But you can't isolate every single risk. You have to be comfortable with taking certain risks. And I think it really comes down to which risks can you live with? Because, you have to get paid some risk premium, right? So, but ultimately, I think it boils down to just being as conservative, as reasonably conservative as you can, to where we spend far more time thinking about the downside scenario, and that every potential investment that we look at, we almost try to reverse engineer and say, okay, if this were to file for bankruptcy, what happened on the operational business side to where that, to what caused bankruptcy. So you want to understand what are the greatest risks to the business. And then sort of on the legal front, you want to say, okay, if this files for bankruptcy, what are our rights in this process? And in each of those cases, trying to be, as reasonably conservative as you can be.
Yeah. And how did your lacrosse background playing at Princeton and just being on the team and putting in the extra hours maybe help your career today?
I think it's really the extra hours, as you said, where it wasn't even playing at Princeton. It was growing up, where so much of my skill set improvement as a player is in middle school, throughout high school, was not done in practice, but it was done in my backyard, shooting on an empty goal for hours at a time, and probably broke a handful of windows at my home. But that's where I improved, and I think taking that mindset to a professional setting, and I always tell incoming interns or analysts that there's too much to do during the workday, that you have to respond to, that it's difficult to sort of improve your skill set just at work, that you have to embrace nights, weekends, extra time here and there. And it doesn't have to be, 12 hours on a Saturday. It can be an hour, 2 hours here and there, hour before you go to bed, wake up 1 or 2 hours earlier on a Saturday and just do some extra reading and some extra work. And so that sort of cumulative effect compounds very, very quickly. And I'd say that approach has been most helpful to me, and that I keep thinking, you can always keep improving your skill set. And how do you do that? It's you put in the extra time. And I think that's really from sort of the athlete mindset that I've applied to my professional career.
Yeah. And as we move on to the fourth part of the podcast, talking about challenges and overcoming obstacles, oftentimes being an Asian American in leadership roles sometimes comes with its own sets of challenges. If you have had some, what were some obstacles you faced in your industry, maybe due to your background?
I'm lucky in that, at least to my knowledge, I don't think I've had any obstacles due to my background. So again, if it's happened, then I'm unaware of it. But I think throughout my childhood, high school, college, professional career, my sort of background, it has never come up either as a positive or a negative. And I think that's kind of how you'd want it, right? You want to be judged based on hopefully your performance, character, who you are. And so, again, I think, at least to my knowledge, I've been lucky to surround myself to work for people that, did just that. So, yeah, no answer to that question other than, so I don't know.
Yeah. And following up to that, like, what role has your maybe cultural background played in developing your perspective as a leader in your career?
Yeah, it maybe less so in the cultural background, but I think part of it is, the first people that I worked for out of college were very supportive of me, and really stressed, building a skill set that could be long-term enduring. And that's something that, as I've progressed in my career and had, younger people come to me and ask me how to do something or what they should do for their career, I've always tried to pass on and really stress the importance of building a long-term enduring skill set. And so I think that that's, hopefully in, leadership type positions, not only is your job to further the organization, grow the business, but I think it's also sort of, you have a duty to some degree to educate the next generation, and to not only educate from sort of a nuts and bolts skill set, but also from just sort of a business ethics type perspective to have them do things the right way as well. And so hopefully I've been successful in that in my career. But it's something that's always kind of in the back of my head that I do believe that I have some responsibility to, make sure that people that, work on our team are getting an excellent experience and that they're, maximizing their career potential as well.
Yeah, and as we move on to the final part of the podcast, talking about advice and inspiration, what characteristics do you think make someone successful at Atlas Credit Partners, especially for younger employees or interns?
Yeah, I think when a couple of our investment analysts came to us through our internship program, and they didn't really have direct finance experience. They couldn't build a model. They probably had never read an annual report. Maybe they had, but we didn't evaluate them based on that. We evaluated them based on what we believe to be very high character people, and they've turned out to be. But just sorry to use the cliche of just very, very hardworking and resilient. But aside from that, I would say that attention to detail is something that I see among younger candidates that, at least at first, is very lacking. I don't know whether it's the proliferation of spell check or AI or what have you. But, I think that, you'll sort of read through a write-up and see many typos or grammatical mistakes, or you'll look at an Excel sheet and you'll see miscalculations or what have you, right? And I think what we try to stress the importance of attention to detail, especially in what we do, is that I always give the example of, within a debt legal document, things as simple as a capitalization or punctuation can completely change the meaning of a legal document, such that, if we're asking you to do just something on one page and it comes back with, many, many mistakes that were easily correctable, then, we're not going to give you more responsibility until you can prove you can master that, because, once you progress and your skill set continues to develop, and, you're tasked with reading a credit agreement and making sure that there aren't any mistakes, that takes a whole other level of attention to detail that's necessary. So that's something that we stress, and it might seem mundane, and I think that at least at first, a lot of team members probably get very, very annoyed and frustrated with how anal I can be, but it's all for a good reason. I promise you.
And mentorship is often a key to success. Did you have a mentor when you were starting out? And if so, what advice or insights did they share that had a lasting impact on you?
Yeah, and I think I referenced this earlier that my first boss out of college continues to be a mentor to me. The most valuable piece of advice he gave me was just develop a skill set, right? Because finance, Wall Street, there are many examples of people that have really fast starts to their career and then they flame out for one reason or another, because either the market changed and their skill set was no longer relevant, or they just stopped working hard, they got content. And so, I desire to have a very long career, hopefully, decades beyond now. And I think that I'm glad that I put in the work many years ago to develop a skill set that I think can endure many different cycles or automation or what have you, to where that's been the most valuable piece of advice that I've gotten, and I'm very thankful that he stressed that, and it's something that I try to stress in younger candidates as well.
Mm-hmm. And during challenging times, what strategies or habits help you stay motivated, focused, and resilient?
I think you're always going to have challenging times, and just understanding that it's not the end of the world if something doesn't go your way. A lot of things aren't going to go your way, and just sort of reverting to the processes that you've built, the experiences that you've built, whether it be adversity faced in high school, college, in sports, or in professionally. It's something that you just sort of learn to deal with over time, and understand that you're going to have to solve a lot of problems. And, if it were easy, everyone would do it, I guess is kind of how we always look at it. But I credit my parents, my family a lot, to where growing up, there wasn't a ton of sympathy if you felt sorry for yourself. And it's something, again, when you're a young kid, you don't maybe quite understand, but as you get older, you definitely appreciate a lot that they never let me wallow in any sort of self-pity or anything like that. And so it was always just, hey, you didn't do a good job, work harder. And that's kind of how we always think about it.
And for the last question, how did you define success at the beginning of your career, and how has that definition changed since then?
It's a good question. I forget, I'm not sure how I defined it at the beginning of the career, but ultimately, how we define success what we're in my current role at Atlas is we just want to maximize our potential, right? We don't necessarily have to be the biggest fund out there. There are many large funds out there that maybe we don't want to be like, but I think that it really is just maximizing our potential, both collectively as a group and individually as well. And so, it's something that any sort of frustration that I may feel on a daily or a yearly basis may just be looking back and thinking, oh, I messed that up, didn't quite maximize our potential there. But, I think that the important thing is you learn from that, and then, you get the next one. And that's kind of always our mindset of, never being content with where we are, and continuing to just grow and learn from both good and bad.
Yeah. All right. Well, thank you so much for being on the podcast today. I love talking to you just about your entire journey and all the bits of advice at the end. So thank you so much.
Thanks, Ben. I appreciate it.